Looking ahead, the prospects for agriculture are clouded by deficient and uneven southwest monsoons amidst El Nino conditions. The reservoir levels, which remain close to normal, bode well. The government's initiatives for crop diversification, including short duration as well as climate resilient crops, and water harvesting and conservation inter alia are expected to mitigate the impact of deficient rainfall. Although manufacturing sector may face cost pressures, the growing diversification of global supply chains should help mitigate the impact. Services sector is expected to maintain its buoyancy on the back of strong domestic demand. On the demand side, impact of weak monsoon on rural consumption may be partly offset by supportive allied sector activities and various government schemes. Buoyancy in services sector and steady employment conditions should support urban consumption. Strong capacity utilization, robust credit flow, and the government's continued thrust on infrastructure are expected to sustain investment activity. Net external demand is expected to derive strength from bilateral trade agreements, many of which have been recently concluded, and some of which are now being operationalized, as well as the market diversification efforts of our manufacturers. Renewed tensions in West Asia, which are disruptive of global supply chains, volatility in international financial markets, and weather-related shocks, however, pose downside risks to growth. Taking all these factors into consideration, real GDP growth for this year is now projected at 6.7%. This is 10 basis points higher than our previous projections. Q1 at 7%, Q2 at 6.4%, Q3 at 6.5%, and Q4 at 6.8%. The risks are evenly divided.